The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday at this time, and I'd love to take your call, especially today, Technical Friday, 877-927-6648. Wow, talk about a yo-yo market. This reminds me on a mini scale of late 2008, except in those days we saw 1,000-point moves up and down. It was unbelievable. And this is the same kind of trading situation, and it reminds me of like a dog when it comes out of the water and it shakes itself, shakes the fur and swings back and forth, back and forth, back and forth. And the water's flying all over the show and everybody's getting wet. And the dog's still standing still. It's in the same spot. And that's it. A lot of noise, but we've gone nowhere. Look at this E-mini that I'm showing right now. Just made a peak C in the 120-minute chart. And it's suggesting that in the 120-minute chart, this time there could be a follow-through to the upside. I'm not expecting the sudden whipsaw to the downside, even though this will be the first time in, I can't even remember how long, that the Chapman wave chin gauge has flashed a signal. It's flashed another one for Monday that said it should have a slight dip it should dip into the negative area for the Dow. But what has happened on the one or two occasions that this particular index hasn't worked when it's at lows, yesterday the trend low was 0.21. So the way I read it for the Chapman wave trend gauge is that represents a very, no matter how high the S&P futures are overnight and into the early morning, at some point in the morning, you would get a sharp decline to negative. So there have been two times over the last maybe 2 years that I can recall. One was an options expiration session that the trend had given on the Thursday, had given the indication. Now, there's a chance because it gave the indication yesterday that we saw it happen all in one swoop. It accelerated that whole phase. And what happened yesterday when the Dow was up 240 and then zipped all the way down to a very small close, that in fact was the work of the short-term trading index. I'm very strict about this. If we don't go negative today, even on those occasions where we've had the Dow up 180 points and it's pulled back all the way to a plus 30 and then closed at about a plus 45, I consider that a failure because this particular rule for the downside says that you should be going to a negative Dow, even if it's by 1 point. The surprise is that if you were going to put in a trade, you could wait until early morning because you'll get a better price. That's really the whole reasoning behind that. So we've seen the same thing today. The Dow is the short-term trading index is very low. So a technical Friday, I just wanted to go through some of those and talk about one of the myriad techniques that we've got in the Chapman wave methodology. Now, look at the volatility index. Went to a peak D in the 120-minute chart. Every time you got into a D or an E, you've had a real sharp pullback for a big spike in the market. This is exactly what we're seeing now. At 17.37, hey, that's not too bad considering. But if it closes by the end of the day under $16.10, maybe $16, that's going to suggest this rally can go into early next week, regardless of what we think might happen over the weekend and into Monday. I'm just going with the techniques. So here's the trading range. Now, I'm going to be discussing for my subscribers, going through it in great detail, the patterns that we're looking at, why I had expected that we should get Elliott wave 4 to the downside in starting the first quarter, going to the second quarter. That didn't happen, but the alternative was that we would go into a sideways trading range and use up time rather than price. I have to consider that that is a viable technique and that there's a chance, even though this is now the 10th of July, we're kind of already into almost mid-July, that there's a chance that we're looking at a massive rotational correction And that would suggest that a close at a new high this summer above 18,351 would have to be considered as a high-level consolidation, and a brand new move to the upside is going to take place. I'm throwing that out as what the technique is saying. Being very strict, I'm making it very simple. If the volatility index starts to trade in the 20s, this market is going down. It hit 20 yesterday and then pulled back. If it starts to trade there, the candle today on the weekly chart is going to be really important. But even more important, 2 closes out of 3 sessions. I suppose I could make it 4 sessions. The main thing is where it closes. Under 17,500 in the Dow would start to suggest very strongly that finally, let me go to this, finally the Dow weekly chart has gone from a sell signal, where it is now because of the very poor technicals, even with this rally, horrible technicals. The MACD is expanding, is still going down. The histogram is expanding at minus 64. The stochastics at 40%. None of this is good. So I see very limited action, and 17,896, that 9-period exponential moving average, if there is a rally into Monday, Tuesday, maybe early Wednesday morning, and then we turn down, that would be major resistance at 17,890s. All right, let's get to the numbers. The Dow is up 179 to 17,728. High today has been 17,773. The S&P is at 2072, up 21. Let me do this here. So let me just say that the Dow support, the first initial support is obviously in the 17,790s, but really it's the 200-period moving average of 17,656. If there's later on some kind, well, it must be evening at that point in Europe. So I'm not sure what we're going to hear. It'll be Sunday night, Monday morning. So at this point, I suspect we're going to hold quite nicely here. Maybe not go too much higher, and maybe have a lot of support at Dow today, at Dow 17,700 to 17,690. This is the way I'm thinking right now. The S&P, let's go to the S&P. So the S&P is up 21 at 2073. What we've seen is this conglomeration of yo-yo moves to the upside, to the downside, but not having closed above the 9-period exponential moving average, which is at 20.70, and we're at 2073. It's going to be quite important today. Not really important, but quite important if finally after 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 sessions, 12 consecutive sessions, there isn't a close above the 9-period exponential moving average. I suspect there will be. Weekly chart starts to break down. If it goes under 2,039.69 was the low of the week of the 13th of March. Actually, I want to see it close under 2,000, close that is, to really say I've gone from a sell signal to a sell mode confirmation in the weekly chart. At that point, it'll also say you're ready for a decent bounce, but the trend, the tide has turned to the downside. The monthly chart, well, we haven't even, this is the second week of the month. There's very little to talk about. A close in the 2040s at the end of July would be the first time we've closed under the 9-period moving average, except for one time, May of 2012, from the very low of October of 2011. Remember that 20 to 22% correction we had, the only decent correction we've had. We're ready for a correction. There's no question about it. It's just how it takes place. All right, let's run these. You've got the QQQ. QQQ is at 107.58, just above the 9-period exponential moving average, holding beautifully on that support, that Chapman wave inside buy zone right there in the weekly chart, but the technicals are terrible. So we're going to be watching this one real closely. I think 3 weeks ago I said it's one of the most important weeks that we're going to have for a long. We're going to have over a long period of time, and coming out of it, this coming week is the confirmation week of weakness or strength, and we'll see what happens there right across the board. So let me look at Apple just for a moment. Apple has had a terrible time. I've been suggesting for a long time that Apple has very limited upside, and that if it took out that support level at 125, That would not be good because it starts to make lower lows and lower highs. There's that monthly with a potential peak F. Hey, you got to just be careful. This is a balance. I would suggest if anyone has a very long-term goal and you're holding Apple for a long time, it's still not a bad time to just take a little bit off. Just reward yourself because that's what you want to put back later on when there's one of those really ugly weeks that really takes the Dow down 500-600 points. And if that's the case, you want to have some money to maybe go back at a better price. That's all if you're a long-term buy and holder. Now let's look at the IWM. We've got to get these done before the break because I've got a lot to do. IWM 129.10 on the 24th of June. That was the high at peak D. The Russell iShares have pulled back very sharply. They haven't tested the 120.99, let's call it 121 area of the, no, it did test 121. So why is that 120.99? Oh, that's because it's the, all right, that's fine. The 120 area is where the 200 period exponential moving average is, and the monthly chart is, the weekly chart is already saying the rectangle formation has almost tested the low that we were discussing earlier this week at 120.24. If that is pierced, if the IWM starts to trade at the 119 to 118 area, then the weekly chart is in correction mode, and that's going to impact the monthly. And on the upside, a break above 125, a close above 125 in the next 3 sessions would say, hey, we're not done yet. We're still going sideways. Now, I'd like to get to GC. This is the gold. Gold contract is about unshaded, 11.59. I just see nothing there yet, but it has held kind of okay considering that it's been under pressure. But wait a minute. Let's put it into the context. See, chart pattern trumps everything else. And the chart pattern has the lowercase h pattern that goes to a lowercase m. But wait a minute. The dollar was hit badly. It's down 80 cents at 95.80 after a peak E top in the daily chart. Monthly chart, the weekly chart got repelled at the downtrend resistance line. I wanted to show you something about these lines. All right, we'll do that later. And the monthly chart, month is still working its way through, and we're not even halfway there. Has 93.60 as support level at the 9-period moving average, and it has a break into the 97.70s. I would like to say 98.20, 98.20s would be very, very positive. And it's just stuck here for the moment. Now let's go to the TLT, which is the bonds, the 20-year Lehman Treasury Bond Fund. And it had a high of 138.50 earlier this year. Now it's trading at 116.21. It looks like it really wants to test that the magnet of 114.80s at the 200-period exponential moving average. It's done it once, might have to do it again. This is a very important index right now to be following. Bonds themselves, can we just do this? Bonds? Yeah, bonds have the same sort of thing. And I just wanted to do copper before we go to the break. Yeah, high-grade copper is holding okay out there. This is a very interesting candle. Let me make a note of it. I'll talk about the candle when we get back. Basil Chapman, Dow's up 188, S&P's up 23. I'll be right back after these important messages.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative market-safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year market-safe power metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. This is a perfect time right now at 11:25, or what is it, somewhere around there, this Friday morning, just to look at the E-minis. You remember the 10-minute chart we were looking at yesterday? Look at these patterns. This is the naked chart, the one that just looks at Chapman Wave methodology. Remember, I had drawn in this dashed line here. We were arching over at the time when I finished my show, and what I was looking at was we were looking to see whether or not that dashed line would become resistance. And look what happened. You went peak C and D, and you missed it. You went to 2065.75 at the end of the day. Yep, that was at the, was that midnight? Yeah, so what happened was you pull back, then you screamed to the upside, then you stalled just below that former peak D at 2210 on the 9th of July. But the time price match worked, giving you the target area as well as the time reference. It pulls back, the E-minis go to 2058.50 and then start a peak A, B, C. Today we've gone to a D and an E. Had a very sharp pullback from the 2070 round number high. And we've pulled back to where? See the trend line? You remember that trend line I drew in the 120-minute chart of the E-minis? Let me just do this for 1 second here. This is the E-mini ESU15. You remember this? I drew it in as we were on the show, right there. I drew that dashed line. look how important you can use certain points. Now, I make it simple in my technique. It's the outside of the bars that count for peaks and troughs, but it's the same thing when I'm looking at the outside of the candle wick. I'd rather use the wick as much as possible, and if I need the body, that's fine. But I like to look at this, the wick bottom, the wick bottom, the wick, 20, 34, 25 on the 5th of July, 20, 35 on the 7th, 20, 36 slightly higher on the 8th, 20, look at the rhythm, down, up, higher highs, higher lows, higher lows, higher lows, and then 20, 38 right here at 5:15 yesterday, and look what happened. That was early this morning, was it? Yeah, so we get to the 10, that was late last night. And now look what's happened. We've gone peak A, peak B, peak C. If we don't make a new high, this bar in the 120-minute chart, we could make it later on. And then 2073 is the 200-period exponential moving average. But wait a minute, this is the one with no technicals whatsoever. I have put in the arches, I have put in the trend lines, and this is the support we were looking at. And look what happened. The high that we wanted to go for here was 2017. If it broke above that arch that I put in there, it should go higher, and that's the left side, right side prime, the plumb line to that midpoint right there. So you've got until 12 o'clock today to get to 2070. And the high so far is 2069.50. So these are techniques. Now, to confirm that, what we're looking at, you want to also have on the other side the technicals. And look what happened with the technicals. You see this green line here? Right, and let me just check to see if you got it as green. Yep, you see this green line? Kind of a pale lime green. Look how the price hit exactly. But it hit, look, I'll draw a vertical line and you can see something that's really important. Look at this. Look how the on-balance volume, the blue line. Look how the red line crossed the fast-moving average of the stochastic, crossed the green line, the slow-moving average. I'm sorry. Look how the green line, fast-moving average, crossed the slow red line, slow-moving average. Look how the MACD made its pivot right at the bottom before turning up. Look how the gray line, the relative strength, made its low right there. So these are all signs to say internal strength coming up. And that's what happened. The moment it broke above the 9-period exponential moving average, that candle there, that was a good sign. Now we'll see. We're almost at that double top area. Will it pull back? Will it give me a D later on today? This is the way I like to look at the technicals. This is a 10-minute chart. Then if you want to use as a benchmark, you can grab maybe a 30-minute chart. Where's my 30? 30 right. Is that a 30? No, that's a 10. That's just, look at that 200-period moving average support. You can see a little clearer than when I showed it to you before. I don't know where my 30-minute chart. I don't want to. All right. Well, I don't see it. Let me look over here, because you do want the larger picture. I had looked at it a little earlier on. That was a bit of a help. And the 120-minute chart is like daily, weekly, monthly. The 120-minute chart becomes a monthly when you're looking at the 10-minute. Here it is, right there. And that said, it went peak A, B, C, D, E, F, slash, E, F, slash, B. And if it goes to a new high, I'd have to call that a C. And the technical is saying, hey, it's going to struggle a little bit here. A little bit of hesitation. All right, Basil Chapman, Tiger Technicians Hour. We'll look at some stocks when we get back. Dow's up 191, S&P's up 23. I think this might last a little longer.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. I just promised myself, look down at your notebook. See what you wanted to do. I mean, all week I've got this notebook with all these notes that I make, and then I'm so busy doing the show, and things move from one thing to the other that I forget. So I want to look at Apple. I didn't mean to do that. So just let me put that one back and come back to Apple. So I've been suggesting that Apple has a problem on the upside. What the downside is, I guess looking out over a 2 to 3 month period, lower lows and lower highs suggest that Apple at 122.95 will not make a new recovery high in this time frame. That is reversed. That really is the down arrow in the weekly. The weekly's gone to a sell mode. The daily is already in a sell mode. Monthly chart is just for the first time testing the 120.15 9 period exponential moving average support that it hasn't closed under since it broke out the last time was in August of 2013. So nothing there. But the MACD has turned down, but it's still very positive. That's the fast moving average turned down. And the slow stochastic has gone from the 90s to the 86. So the monthly chart is still great. So I don't want to change anyone's thinking here, but if you do have it, just like I suggested was it Jennifer? We had a caller from Wellesley, Mass town next to me, Newton, Mass. And I suggested that BIB might have a little bit left on the upside, but the way I'm looking at it, it's going to come back and retest the low of May of this year, the week of the 1st, down to the 368 level. And it went all the way up into the 405, 410s over the last couple of weeks. And right now it's trading at 387, and this week it's already made a low of 381. And I don't want to change your long-term view, although personally I would start to lighten up quite a bit, but that's not the issue. You've been in this a lot. If you've been in it a long time, rather just extricate yourself from any damage by slowly taking a little bit off. Why? Because if this thing soars back up to a new high, you'll still have a good position and you'll be making money, not as much as you would have because you've taken some off, but just good money management says this chart pattern suggests time and a little bit more in price at least. But my eye says in the monthly that the 350 to 330 area really will be a target for later this year. Could be wrong. That's why I'm just saying. I just recommend starting to take away. So let's go back to what we were looking at before, and that was Apple. So I'm recommending the same thing. The best of Apple could have been done. Yes, it could go to higher highs, dragged up by the market if it suddenly gets a good kick in the pants. But the way I'm looking at it right now, more likely that Apple at 122 will be trading between 115 and 112 later this year. And that's where you can take another look at it. So I'm just suggesting take something off. Good money management says, hey, take something off. Now, there are people that have the exact opposite thing. They love the stock, and every time there's a pullback, they put more and more into it. This is the time where I would not be 100% invested in my Apple position. I would be whittling it away to maybe as a core position, maybe 70%. I'd even probably be thinking lower than that, just personally. But I'm just saying I would be taking off something because I think that Apple's best days, at least for this particular phase, are done. That's just my opinion. Okay, now let's go on to, I said I'd do that. I want you to do the next one, which is Tesla. Remember, I spoke about this. I said I'm getting a peak D. I think it's going to be a top of consequence for Apple, for Tesla, at least in the shorter term. It went to 282.45 at peak D and pulled back very sharply. It could test 264s. I can just tell you this, that if in the next 3 to 5 sessions, if Tesla takes out 250, closes under 254.31, let's call it 254, a close below says it's going to have a real quick trip down to the low of 246 back on the 15th of June. That's the way I'm looking at Tesla on the short term, that you've just got to be a little bit careful. The weekly chart had a fabulous U-shaped pattern that wanted to test the previous high of 291.42. It is in leg B, but it's gray B. I did put an up arrow in because the stochastic and MACD are fabulous. That's the reason why for some of these real great winners, if you've been in for a long time, I just want you to maybe lighten up on these things. I don't want you to get, I can't, if you got in correctly and made a lot of money, I'm not going to be the one to tell you to get out when you've been the one that's had the eye of perfection. So I'm not going to do that. What I am going to say to you, based on the patterns that I'm looking at, Tesla has one more week in order to try for the 291.42, which would make leg C. And if it can get even closer to that, it's very positive because it can go to a D in the weekly chart. Same thing, it almost applies to the monthly chart. But if for any reason in the next 4 or 5 sessions, Tesla takes out the low of 3 days ago of 254, I would suggest to you to be a little bit careful because it could take quite a bit longer with the test of the 240 to 237 area if this market weakens later on instead of running. And I do expect that we could have a good Monday and Tuesday at this rate. We'll see. So that's with Tesla. And I wanted to look again at Disney. I said that Disney was making a peak F, and I put it down. I anticipated that was a silly thing to do. I used to automatically, when I got an F, put in a down arrow until I found that you could recycle. And in this case, you've got it. This is the perfect. I meant to do that. I don't know why I forgot to do that. I was so busy looking at it in the 120-minute chart. That recycle is an Chapman wave instant restart. It is technical Friday, but I don't want to go into it right now. It says within 3 bars after a D, if you immediately take out, especially with higher lows, you take out the previous high of D within 3 sessions, there's a real good chance you started a parallel wave count, E/A, F/B, and now we've got G/C. And that's suggesting that Disney, DIS, trading at 116.17, could in fact go a little higher. Now, what do I have in the 120-minute chart? E/F, because the technicals were improving. Let me just double check here. The technicals were improving, and this is one of the winners. And I think in this particular phase, fund managers are going to say, hey, the ones that are standing alone as leaders are the ones that I'm going to focus on here, at least for trading positions. This is kind of what might be happening in Disney, but I'm really close in getting to the point where I think that Disney is going to have not a major collapse, but a pretty good sideways to down trading range, taking it down to is 116.16 right now, taking it down to the 112 to 108 area as it consolidates sideways to slightly down. Question of the day, going to look at QVCA. QVCA. Liberty Interactive Core. I don't know if I've ever done this. Peak A in the monthly, and now it's having a high level after the IPO just about less than a year ago, and trading at $27.99, up 58 cents. This is Liberty Interactive Core QVC Group. Is this the QVC Group? I guess, I don't know. Oh, yeah, it is the shopping group. Okay, holding very well for a shopping group. I suspect that this will be the last of the RTH sector. I don't know if it's in the RTH of the retail sector, because people who watch TV and those shows, it seems to me, I'm just guessing, I don't have figures for this, it's just my guess, have a propensity to try to stay with the program. And they're the buyers, they're the ones that are really keeping it going. And they're not going to the shop or anything like that. They're just at home and saying, hey, that looks good. Oh, man, I got to have that. So they just click the button. That's what I'm thinking here. So I think it's holding very well. Sideways action, slightly down to lower highs and lower lows. It needs to break to the 77.60 area. It's at 76.67 right now, so that it can kind of snap out of all this resistance. 77.26 was the high of the 19th of May. Yeah, it needs to do that. If this is RTH. When you move around too many charts, after a while, what did I say it was? QVCA. Oh, QVCA shares? Yeah, that's what it is. So same thing applies. That's really, the chart's very familiar to me. Not the stock, but the price, the pattern, like the RTHs, making lower lows and lower highs. So this is, question is, would I buy it? Really, would I buy it or would I sell it? I wouldn't buy it right now because it's gone with the market, and the sharp, ugly down day, it participated to the downside. Unless you're thinking of a trade, you get in at 28.01, I'd put in a 50-cent stop. Why do I make it so tight? Because if the market closes towards the high today, then I'm suspecting that we do have, if there's no news at all, or if there's no bad news, the propensity now, with all this whipsawing, is to at least attempt a relief rally in the market so that we could go higher. We'll know, because that volatility index, I'll talk about it as we wrap up the show in another 10, 15 minutes. But in the meantime, you could nibble on at $27.99 right now. I'd have a 40-cent stop. Let me see if 40 cents enough. 27. I'd have a 27.69 stop, just a penny under the 9 EMA. If QVC holds today, or actually goes to 28.18, or we survive the weekend and Monday there's a rally and it can get to 28.20, I would just raise the stop on that position. Would I add to it? I don't think at this point I would add to it, but maybe Tuesday I'd be thinking of adding to it. But in the meantime, that's my impression of QVCA. And someone's listening because it just spiked. Okay, so now let's go on with this. So Disney, and then Procter & Gamble, we had our caller. We had a caller 3 days ago, and I said 4 days ago. And I think Procter was trading in about the 80-something range. And I said, yes, the two stocks we were looking at, one was Whole Foods. And I said, I don't want to touch Whole Foods right now because I think that it could bounce. But if you're looking intermediate term, I think it's going to have to come back and do some retesting. Well, it had a very nice move from the time we spoke, which was in the 39.70s. It's at 41.18. But Procter & Gamble was the other one. And that one I said, I think if you're going for dividend and you're going for the defensive type stocks, then Procter right now is the one that I like. And it spiked from the 79s the 79, I think 70 or something like that, where was it? Yeah, I don't think it was, it might have been 80. And then the rest of the day, for some reason, there was news, and or the next day just spiked up and had a great day. So that's the one that I think has the potential to have an arch formation that could take it to the 84 level. I think Whole Foods will falter before that. So now let me do this. So 1, 2, 3, 4, those are the stocks I needed to look at. And the stock that I keep being asked about was FEYE. And my suggestion was acting okay. And if you had it, just make a fairly tight stop. I think it has a little bit of a rebound in it. It's at 49.50, up 59 cents again today, but it's nothing that I got too excited about in that area. So if I see, if you want to nibble, but just watch it with a trading stop, and that's kind of how it's acting. Now I want you to do something that's very important. I want to go to the VIX index, because we've just got another surge in the market, down at 16.92. So I was asked about the positions in my opening call. We took profits of 20 to 30% in a lot of positions. We've only got just like a little nibble on some of them, and we are looking to re-enter on others on the short side. On the long side, we did have a position that we bought yesterday, and unfortunately, it just got stopped out. It's a shame because I really liked the stock. I didn't expect that big, ugly buy. I don't know what it was. It tanked. We bought it at 8.88 and it went down to 8.57. So we took a 20-cent loss on this, a small position. That's all. It was just a long shot on the long side. And I was expecting a leg D. And look what happened today. It gaps up and it's doing beautifully. It's at 8.90. This is AHT, Ashford Hospitality Trust. All I was expecting was to trade it for the D, and then we would see based on the market conditions, etc. But it seemed to have the propensity to, since the weekly chart 4 weeks ago turned around, it has this propensity to use every week as a building up of strength to move higher. How high, I just don't know yet. We're kind of stuck now. I'm not sure what I'm going to do about it, but it is acting very well. Look at the 120-minute chart bounced off the 200-period moving average. Monthly chart is still not great, but it just looked like it was. Terry bought back. Great. That was great, Terry, because I wanted to do that, but there were so many things going on. I didn't want to overdo anything. So that's the story there. And we did take profits in my ATHN, which was Athena Healthcare. Now it's back down again, but I just don't want to mess around. I don't like the stock technically. It's a great company, but a lousy stock at this particular point. But we got in at 117.41, and we got out at 115.41. And the only reason is that if this stuck, this rally that early this morning stuck and was trading out at 116.30 or so, that would have started to improve the weekly, which would say now it's ready for another M pattern. Well, I don't want to be wasting time as it makes an M pattern. I'd rather be out with a bit of a profit. That's fine. Another thing that I want to talk about in terms of the VIX index was we took very nice profits in our trade on the 200% long position. But at the same time, we've kept just a tiny little bit because we got in such a great position. But at this particular point, based on the 120-minute chart, look at that. I have no choice even now with the day still half to go. I really have to put a down arrow here because this bar right here with the technicals breaking down says that, yeah, it's going to take a little time out, and that timeout might last until early next week. So the VIX index is saying, and the weekly chart is still, at this moment, is still okay, but the day is young, as I say. We'll be right.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Folks, we're back. Don't forget, you've got a great show coming up. You've got Nico and Paige. This is a lot of tremendous advice. Now, let me just quickly do this. I had a question about whether I talk about the VIX. I'll give you the whole thing in a moment. Remember the left side, right side price time match? I said you've got until 12 o'clock to break 2070 on the E-mini. Bam, we did it with 1 bar to go. And this says it's a peak C, and there's a real good chance that we will make a D, and then you got to be careful. Then there'll be a bit of quietness before the close of the day. That's the way I'm looking at it. This is just using, remember, no technique other than the Chapman wave count and these V-shape or cup-shaped patterns, trend lines, or the arch formation or inverted arch. All right, let's go back to the question I had here about the VIX. So the VIX, VIX, whether it's going to be a peak F or not, yeah, I suspect it is on the daily. If at this point it's still in action, alternate counter of F/B. Everything about it suggests that if there is a pullback, certainly if there's a pullback by Monday under the 1620s, this is going to be a peak F, and then we have to wait a while before you can start the next move to the upside, if that's going to be. But in the meantime, back at the ranch, the weekly chart, if it closes anywhere around this area-ish, that'll be the second close above the 200-period exponential moving average. So I hope I answered that question. Then I had another question saying, good morning, Basil. I'm still holding RAD. We had some fantastic gains over the last 2 years in Rite Aid. We're out of it. Should I continue to hold? I'm almost even, thanks, and have a fun weekend. Even meaning that he held it on the pullback. Okay, so let me do this. RAD, this is a great move. I looked at it 3 days ago, and it looked like, okay, let's see if you can hold. But yesterday's action was terrific, and today's action is very good. I'm going to suggest hold it, but this time you have to have a stop. Ivan, it's just really important. Put a stop in at this stage, just a little bit lower, because it's got to keep going right now. So around about 860 to 854, take at least half off. You'll be able to put it back on lower down. It's looking real good. It looks like the best case scenario is that it makes another second cup formation in the weekly chart. Might have to dip to $8 or $7.80. But if this continues and it takes out at 877 RAD, trading up 9 cents, if it takes out 906 decisively next week and actually closes above 918, 922, I'm going to suggest that that's a great position that you've got, because you could even add on pullbacks after that because it's back in play. So that's Rite Aid. Oh, Sean in Hudson. Hi, Sean. How are you?
Hey, Basil. I know time's running out here.
Yes,
Going back to that VIX.
So did you, the XIV, did you buy the XIV or not?
Yeah, I flipped out of what we had in the newsletter, and I bought the XIV yesterday.
Okay. So the XIV is the VS inverse fixed short-term ETN. All I'm going to say to you, make it real simple. A stop on the day. It's at 39.23. If it takes out, you have the risk of Sunday night. It can either be fantastic, or Monday early morning, we might gap up again 20 points or gap down again 20 points. That's the risk you take. I don't know if you're prepared to take that risk, but if you are, then I would say hold the position. But on an intraday basis, if it takes out 38.50, I'd lighten up. I wouldn't be holding it, regardless of what happened on Monday. This would be playing the inverse of the volatility index going up. This is when the volatility index goes up, this goes down. So if the VIX index does start to take out the 17 support, starts to trade in the 16, where is it now, did I say? Whoops, it's at 1662. If it starts to take out the 1620 to 16 support later today, you're going to look great. So then you can hold it over the weekend, because even if it gaps, even the market gaps so that you would have been stopped out, you've got a good cushion. That's what you already want. So hold it, but on an intraday basis, lighten up if this starts to come back a bit, okay?
Okay, thanks a lot, Basil.
Thank you very much, Sean. Sean in Hudson, and this is Basil Chapman. Check out my opening call this weekend. I'm going to have a lot of information, very important stuff. We've had some very nice trades. I'll be back Monday. Have a great weekend.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.